the title of this one is Divest or Double Down. Both aren't ideal words and questions, but if you were to have to choose one of them, if you're on divest, just put up your hands. And if you're on double down, okay. So I think we know where the room is leading on this one. Now, what I'm going to do is start this off with my own personal journey, because I think it really talks to this subject. So I had 20 years at Total Energies, so the big French energy company, and all of that was in the non-oil related business, so gas and electricity, LNG. I then left that after 20 years and went to a green hydrogen company and did that for 5 years, and have now started FlueVault, which is a Singapore-based company, removing CO2 from industrial emissions. Now, that really sets out the journey that I'm actually up here to talk about, because I was very much in the hydrocarbon space, natural gas, electricity. And I, after 20 years, was like, no, right, I'm divesting myself from this, and I'm going to go pure green hydrogen, green molecules. This was going to be the savior. I believed it at the time. This was about 6 years ago. I've been through that journey. It's not quite that simple. So I've now gone, solve. I'm going to go back in there and try and solve the issue. So I'm going to be cheeky through this. I would not pick divest, and I certainly wouldn't pick double down. I'm going to pick the halfway house and sit on the fence here, and I'll explain why. So first off, not all hydrocarbons are equal. The first thing I'll say is it's not hydrocarbons that are bad. It's the emissions that are in hydrocarbons that are bad. Hydrocarbons produce low-cost energy. The CO2 that's emitted creates climate change. I think it's important that we try and separate that initially as well. Now, coal, dirty, big cross. Okay, I'm not a big fan of that, and the world has transitioned away, or is very much making that step. Oil, gosh, that is emotional. Me personally, I don't like oil because I don't like the plastic side of the oil business there. And through EVs, etc., that oil demand will start coming down. I'm going to be controversial. I don't mind natural gas too much as a low-hanging fruit. A low-hanging fruit to reduce emissions. Okay, so that's why we've got to consider hydrocarbons in its broad spectrum. Now, let's get back to the question, divesting or doubling down. Many of you in this room would have seen this energy trilemma up there before. So how does actually divesting and doubling down fit into this energy trilemma? So if I had the right slide up here, this wouldn't be crossed out. It just gives away my next slide. So we've got to try and find something that is reliable, is clean, and affordable. Now, if we were to actually divest of all of that, what we would find is reliability, open question. Massive steps are being made in energy that is reliable, but we're not there yet. Affordable. You can't get around the fact that hydrocarbons per energy unit for a constant flow of energy is still probably the cheapest. Yes, solar on its individual basis, but it's still probably the cheapest. Okay, but you would have clean. We need to try and get all of this working together, and it's almost impossible to do, but that's what we're all working towards achieving. So the first thing to say, okay, is now it is a transition, not a swap. Everyone seems to be quite passionate and emotive about this. It's a transition, not a swap, and we have to go through that transition process. We know the solution. The solution is wind, solar, batteries, all the clean energy that is out there. But there's no reason why this bit can't also be a part of it through this transition period if we either remove or drastically reduce the CO2 emissions that are associated to it. Ultimately, we want to get rid of fossil fuels. That is the ultimate goal, but it's got to be done in a very managed way. Okay, so how can we actually, as an investor group, work towards achieving this? So exposure to fossil fuels isn't necessarily a bad thing if it is done correctly. And through my own personal journey, I believe more can be done to facilitate cleaning up the existing fossil fuels than is actually currently being done. So, investing in low carbon technologies. I think there is a lot going into that. From my point of view, I'm going to slightly disagree with the previous speaker. I think politically, people are starting to walk back a little bit from that, but the momentum is still moving forward. I'm seeing it myself. It is still going forward. And the economics of a lot of this technology is also improving more and more. And you can't hold that back. Politics will be short term. Economics will be long term. Okay, transition finance. We've done that. Emission reduction upgrades and managed phase out strategies. I'm just going to focus a little bit on these two. Okay, so today, if you exclude oil rigs and all the production equipment, there's about $5 to $8 trillion invested in hydrocarbon infrastructure. You're not going to wipe that out of the economy today. This needs to be invested in proactively to try and also clean it up. How do you do that? There's a whole number of things that we can do to try and do that. And yes, that's energy efficiency. That is carbon capture and storage, or what we do at FlueVault, which is stack to storage. There's a whole number of things that we can actually do to try and improve the existing infrastructure that we currently have in the hydrocarbon space. And I don't think it's an area that is really tapped into yet. Because it's hydrocarbons, at least over the last 6-7 years, people have gone, oh, I can't touch that because it's hydrocarbons. No, rubbish. If you can invest in hydrocarbons and reduce the carbon intensity of that bit of infrastructure, do it. It is a positive. So now I've sort of coined this myself. This isn't an actual thing, but I'm sort of call it capital plus when I start looking at it. So that's by, put the capital into some of these hydrocarbon bits of infrastructure, but that money comes with sort of requirements attached to it. Improve the carbon intensity of it. You can have debt or equity of a few hundred million, but it's got to be associated with these key KPIs. Or why don't you invest that chunk of money in the industry, but also invest a secondary tranche that goes into balance of plant decarbonization investments? Or you're going to put it in, but there is a commitment within 10 years, there is a transition plan. You're transitioning from coal to actually transitioning it to battery facilities. Use those electricity grid networks. Use those pipelines that are already in place to help aid that energy transition. So if you're going to put money in, and this does need it, then make sure there are actually connections to that money so that key objectives are met after a 5, 10, 15, 20-year period. So all that being said, I think it's clear that for me, and again, this is my experience talking here, investors need to be more knowledgeable, in my view, on the infrastructure and sectors of which they're putting the money in. Okay, I think that's really, really important, because if you go in there without a proper understanding, it's very difficult to put key objectives in there on the money that is actually going on. You also need to have slightly more hands-on the governance of those bits of infrastructure. Infrastructure people will hate that. I hate that as a founder, but that's how you're going to actually have to implement some of this change. Willing to balance lower potential short-term returns? Yes. Longer term, I think you will make it back because there's less political risk in that investment. But in the short term, yes, you may have to accept lower returns. Mature dollar risk, I think, is important. I didn't say higher risk. It's just a less mature risk profile because this is a new sector. And we know that financiers do not like investing in things where they don't understand the risk profile. Well, this is a new sector, new technologies evolving. You're going to have to accept that. But most of all, and I think this has really been drawn out over the last few years, where 4 years ago, everyone was like, way, we love fighting against climate changing investing. And then as soon as someone else says, actually, I'm not too keen, they go, yeah, no, fair point. Yeah, no, we'll go away. So this really needs to be backed up by more than just green words. There is an investment opportunity here, and it doesn't have to be so binary in terms of climate change, anti-climate change, etc., I don't think doubling down is the answer. I don't think divesting is the answer. And I think we actually have to invest in everything, tidy up what we've got and invest for the future and pull that all together. So I'm going to cut that short there.